In focus, earnings season carrying on with results from Alphabet. Shares higher in the aftermarket, up more than 4% after first quarter earnings beat on the top and bottom line. The company also announcing a $70 billion buyback. Let's bring in Rohit Kulkarni, who's a Roth MKM managing director, for some insight into these results. So Rohit, thank you so much for joining us. What's your first thought on these results coming in today?
Look, I would say that the sentiment for Google heading into the print was negative, as in there's no other way to say that. People had a lot of negative opinion on what would OpenAI ChatGPT do to search. What is the cost-cutting plan? What is the capital allocations plan? I think there are significantly more positive surprises in today's print than what even the stock seems to indicate. Cloud is growing, cloud profitability is improving. They're buying back shares. Search, which people had started to kind of question, that is outperforming expectations. So a lot of positives, a couple of small yellow flags. Headcount increased sequentially. Didn't they lay off a lot of people recently? So again, we'll love to hear more about cost cutting in the next couple of quarters. But I think again, this puts to rest a lot of concerns heading into the print.
Rohit, you mentioned the cloud business there, revenue of $7.5 billion, up 28% year over year. How big of a catalyst do you see this being for Alphabet in the near term?
I would like to use a term which sell-side people rarely use: inflection. We see inflection in cloud. We see AI is helping stabilize cloud and inflect the spend higher. Microsoft is saying the same. Google is seeing that, and I think that bodes positively for Amazon when they report on Thursday. So what Google as a third player is doing is also inflecting on profitability. This is the first quarter they are showing positive operating income. Again, they did reshuffle some costs here and there. That's a minor yellow flag. But I think on reported basis, they are positive on margins for the first time on the cloud. So that's an inflection quarter. So that's we like that. And every investor would be cheering.
So, Rohit, you are a bull when it comes to Google. You've got a price target of 126. So it's certainly seeing some movement in the aftermarket today off the back of its results. It is a beat. But what do you see as the headwinds for this company?
The headwinds are twofold. One is, again, if you look at what some of their internet peers are doing from a cost standpoint, Amazon and Facebook in particular, Google has not been as aggressive. They were very aggressive in hiring over the last couple of years, but they are not very aggressive with cost cutting. So perhaps that is something that we would need better answers from the CFO of Google. And second is, at the end of the day, search is a maturing business. So any innovations in search, longer term, this is not a near-term headwind, but longer-term headwinds in search, be it coming from Microsoft, ChatGPT, or other sources, that is something that we'll need to keep an eye on. So profitability versus growth in search is something that is there at a very curious junction, if you will, as new ways of searching on the internet are emerging, and perhaps Google needs to rethink some of their longer-term investments.
Rohit, what would you like Google to focus on in regards to their longer-term investments, what we were just talking about? Because, of course, the common, I guess you could say, maybe thought on the street right now is that Google is in a vulnerable position given Microsoft's investment in OpenAI and the potential there for AI.
Yeah, absolutely. As in, it is in a vulnerable position. They are losing the PR war, if you will. They are not yet losing any fundamental kind of profits so far. So far being the key word there. So I think from prioritizing long-term investments, Silicon Valley has always believed that Google is the leader in AI. Google has always done the cutting-edge research and brought around new products on AI. But we aren't seeing any real direct-to-consumer AI killer app from Google yet. So I think that's what we need to focus on. What is that AI killer app that Google can introduce in the next 3, 6, 12 months, and how can they turn the PR table into into a more of a fundamental battle as such.
Rohit, you mentioned wanting to see more cost-cutting measures from Alphabet. And I mean, they announced some earlier this year with making dramatic job cuts, which you hadn't seen really in the company's history. So what is it that you want to see from them next with regard to cost-cutting measures?
Again, I think we need to acknowledge that we are still in a soft revenue growth zone for entire industry. Google is showing search revenues growing 1 to 2%. So that's not heroic by any measures. So as we are in this soft revenue growth era, we think costs also need to grow in line. And I think hiring needs to slow down. So if they had laid off so many people, yet the headcount increased sequentially quarter over quarter. So I think we need a little bit of softer headcount growth, or in fact, we would like to see headcount to be actually declining quarter over quarter, just so that the base of operating expense that Google carries forward while the revenue growth is softer, I think that goes in line. So I feel that there needs to be a little bit of extra discipline from a cost standpoint. And with the revenue upside that we are seeing, that would just simply put rocket ship boosters to the stock.
We will see whether or not we get an update on that on the earnings call tonight. Again, shares up just about 4% after hours. Rohit Kulkarni, thanks so much for joining us.